Today we are looking at Domino's Pizza Inc. ticker symbol DPZ. What we're going to be doing is looking at the fundamentals of the stock to give it a fair value based on a discounted free cash flow model and the Buffett-Graham intrinsic value. Then we're going to be looking at some technicals on the stock as well. But just quickly, the stock is currently at $495.88 a share, down 2% from the last day of trading, but you can see on the pre-market it's up a little bit. But one of the reasons why I want to look at this stock is if I just go to Google Finance here, and we have Domino's Pizza Inc. It is up 30% on the year from the start of January, up 31% from this time last year. And if we just compare that to the SPY, you can see that they are actually pretty close. SPY beating it over the last year, but if we look over the last 5 years, you can see that Domino's Pizza Inc. has absolutely demolished the S&P 500 with gains of over 210% compared to 116. And obviously, if you compare to the max, you can see that Domino's Pizza has nicely beat the S&P since 1993, or definitely since when Domino's was started in 2004, up 3,000%. But you can see that over the last year to date, it is slightly higher than the S&P, and it's consistently beat the S&P for quite some time. So this is a very interesting stock. First, we want to look at the fundamentals. So it has a market cap of 18 billion, share price of $495.88, 52-week low of 320, and a all-time high of 548. Pays a very small dividend, and the ex-dividend date is on the 14th of December, and that dividend is 0.06%. So is the P ratio less than the market? No, it is not. 37.68 to 28.5. So unfortunately, that is a fail. Revenue has increased 3.4 billion to 4.3. Next, you want to see is the profit increasing. Yes, it is 360 million to $500 million. So that is a pass. Domino's do an excellent share buyback program, as you can see here, 42.9 million to 38.8. So that is a massive check there. So can we get 38 likes on this video for that 38 million shares? Anyway, is the free cash flow increasing? Yes, it is. It's almost trebled, 270 million to 620 million. So that is 4 passes and 1 failure on the PE. It has a free cash flow ratio of 29, which is slightly on the high side, but more in line than the PE ratio. So maybe the PE ratio is a little bit high valued at the minute. And the dividend is safe as they only pay $11 million in dividends, yet the free cash flow they have is $620 million. So now we have the models. We have a discounted free cash flow model at the top, which calculates the future free cash flows of Domino's, gives a potential value of the future free cash flows, and then gives a calculated stock price. So based on these future free cash flows, you can see that the calculated stock price is $493.93, which means that it is about at fair value right now according to discounted free cash flow, only 0.4% difference. And if we look at the Buffett-Graham intrinsic value using earnings per share, the expected growth, and the fair value, the AAA bond yield, you can see that this actually has a fair value of $453.55 and a Graham price of $340.16. So it looks like both models are saying that the stock is about fairly valued at the minute, which is quite interesting. If we just go back here, you can see that a Graham price of 340 would have been a time to buy. Let me just quickly go back to the year chart. I mean, the Graham price would have said it was a definite buy during this dip here, but unfortunately we're not looking at the stock till now. So this stock has consistently beat the market, but the models are saying it's about fairly valued. Another thing I like to look at is the analysts, and the analysts are saying buy and hold. So if it's a moderate buy, if you have the stock, hold it. If you don't, then it's slightly more saying buy it. And they would say it has a upside of $531.83 a share, a high side $590. Average is 531, and the lower side is 4868. So analysts are saying that the stock will probably not drop down much below this point here, where there was definitely some support previously, but on the high side they're saying it can be up to about 530 to 590. So analysts are liking the stock still, but the models not so much. Now we want to have a look at some of the technicals. So I've got the major moving averages here, a 50-day in green, a 100-day in yellow, and the 200-day in red. And what can we see here? Well, you can see that the price has crossed above the major moving averages here, so that would be a strong buy signal. But the 100-day and 50-day have crossed, so that's probably expecting some negative momentum here. But you can see if we go back, the 200-day hasn't been breached basically since December of the year when it had this drop down, but it quickly broke back through. There was lots of bullish movement there. The price went through all three major moving averages. That would have been a massive buy signal from 380 to 540. So that would have been a buy, and then you would have sold at around 520 here. So I would basically just say that yes, we have a bit of a negative price movement here, but the stock does look like it's rebounding. If it does hit the 200-day, that would be a definite support point, which hasn't really been consistently broken since that big move here. I think they had some bad earnings, and that was why the analysts, the market reacted very poorly to that. Next, we want to look at the MACD. So let me just get that up here. And the MACD is the moving average convergence divergence. And this stock is actually very interesting to look at one with this. So we have the daily. You can see that we had some bullish movement here. That would have been the buy signal when the MACD signal line crosses. Right now, we are still on the upwards momentum, which would be a buy. But if you look at this stock on the buy side anyway, this would have been a buy here, and you would have sold there. That would have been a buy. You would have continued basically the entire way from, what, 420 onwards, and then this was a very good buy signal here. So normally when the MACD turns in the positive, this stock does have some pretty good history of bullish momentum. So either buy now and try and ride out the momentum, or wait for it to cross over again and then wait for the next bullish move. And then I would say then that's definitely a buy. And then finally, we want to look at the RSI. Is it in the overbought or oversold regions, and then compare it to previous times. So the stock did push the overbought region. We can see it's done it quite a few times. The stock has broke above this line quite consistently, and when it has done, we have seen some pullback, but it has done it consistently. But the thing I want to look at here is when it's in the oversold region. That has always been pretty good times to buy the stock. So if the stock comes back down here, then that will be a definite buy signal. But overall, I would say on the technical side, yeah, you could probably try and ride out this momentum for the short term. We can definitely see that the stock has broke the $500 and even got to 540. So there's no real high resistance here. The next sort of consistent resistance point was at about 520, but I think the technicals are looking quite strong. Fundamentals are looking strong as well, but the models do say it's a little bit overvalued or right around fair value, but the analysts also like this stock as well. Right guys, thanks for watching. Please give a like on the video if you've enjoyed it, comment down below, and I will catch you guys next time.